Hey, what's going on, everybody? Welcome to K.Ash Capital. You're watching the Trade of the Week and the Weekly Trading Review. Now let's review. Hey, what's going on, everybody? Welcome to the Trade of the Week and Weekly Trade Review for January 13th through the 17th. Alright, we did a total of 5 trades this week with 4 winners and 1 loser, making an 80% win rate. Finishing the week up $502. These last 2 weeks have not been near as big as I would like, but nonetheless we are green, so we'll take it. And then, let's see, we'll go over a few more stats. Alright, so for the month we have 8 winning trades and 5 losing trades, making a 60% win rate, which is about average, about every other trader. 60% is about the average. And then as far as green days to red days, we have a total of 6 green days, 2 red days, making a 75% green day ratio. All right, and we'll also go over some of this monthly stats. So last week we finished up $518, and this week we finished up $502, making $1,020 for this month so far, and we're halfway through. So hopefully we can bang out another 1,000 or 2 out of it, making it about a 2 to 3K month. All right, Monday close out that Walmart put butterfly. Now, if you're not familiar with this trade, I have 2 videos on this trade right here as far as entries and exits. We'll go ahead and put out the screenshots of what the videos look like. Looks like this. And then I will also go ahead and put little cards at the top for you to click on them and go ahead and review those as well. I've already talked about this trade a few times, so I won't waste anybody's time talking about that one. Alright, I didn't do any trades on Tuesday, mainly because of Wednesday. Wednesday was when the trade deal was supposed to be signed by Trump and China, and any hint, or I believed any hint that it was not going to happen, I felt was going to make the market go crazy, because that whole trade deal has been what's been moving this market all over the place. So, therefore, I decided to wait, sit on my hands for the 14th. I didn't do anything. On the 15th, all I did was enter 2 trades. Now, what did I enter? I got some calls on low, and I did a overnight swing trade with cost. So I'll go over the low trade. So Lowe's has pulled back to the 21 EMA, which is this white line right here. We have a squeeze set up, which is these red and yellow dots. So basically, right now with the yellow dots, that is a high compression squeeze. It is in between the 8 EMA and the 34 EMA. Everything is green up top right here. And that's just another view, and those are 1080X bars. So basically, long story short, we have a squeeze happening, and all the momentum is going to the upside. And then you can see right here, I entered on the 15th, and on Friday I go over how I exited, but I ended up selling almost half for, how much did I get? For 55%, but I'll go more in detail on that on the slide where we closed it. Alright, and cost. You know what, I'll cover that one in the next day, because all that's going to be is repeating it, because I exited then the very next day. Alright, let's go into the 16th. 2 trades. I entered a hedge position with TLT and cost. I told you about Costco, how I entered that trade and closed it the next day. I'll go ahead and go over that one. So basically what happened, this is a 30-minute chart right here. Then you see we have the mid compression squeeze and a high compression squeeze. Sorry, couldn't talk. And a high compression squeeze with the momentum going up. So I was anticipating this breakout to be to the upside. You see it's basically an ascending triangle. Let's see if I can draw. Let's try this thing out. Alright, so you see there's resistance, and then we're making higher lows. So I was anticipating a breakout to the upside off the 30-minute squeeze setup. Alright, so now what happened the next day? Sorry, I just downloaded this Epic Pin app thing. I'm trying the free version out. Still trying to figure it out. Okay, so here is the next day, and it happened just as I wanted. So right here was the resistance, higher lows, and you can see that it broke out to the upside. And that is really fat for some reason. Okay, boom, boom, and you can see it broke out. And I was targeting the 1272 extension, and when we hit it, you can see I exited the trade for a 55% winner, and I will go over that right here. So all I did was buy one call for $310. So basically I had $310 on the line. If the stock was to completely go to zero, then I would have only lost $310. So I had $310 on the line, and I sold it the next day for $470, and that was a 55% return overnight. And the amount that you could have made on that is only based on how big a position you wanted to put to risk. I'm experimenting with these 30-day squeezes. I know some people do them pretty regularly, but I don't have a lot of experience with them. So I thought I'd throw only one contract at it, see how it worked out, and so far it worked out on one trade. I like it, and I'll still play with it and maybe pull out some bigger winners on these overnight swings. But you can see right here I was risking $70, and I made $160 minus commissions. It became to $158.40. So a 2-to-1 risk reward trade, that's all you need. If you can make 2-to-1 risk reward with a 60% win rate, you'll be just fine in trading. And if we go down here to where it shows the entries and exits, so this day I entered, then I exited the next day on this pop-up. So if you can replicate that a bunch of times throughout the week, you'll have a consistent profit. So, alright, on to the next day. Alright, now TLT. This is a hedge play. So the markets are really overextended. They have to pull back sometimes. So this is a hedge. I'm worried that once a little pullback happens, we're going to pull back hard. So what I do, I bought some TLT calls that go all the way out to March. So basically, so TLT is the bonds. When the market typically goes down, bonds go up. So this is a hedge. So if the market goes down, this will go up to counter my losses from my long trades. And it also has a technical pattern as well. So here, so there was this trend line going down, and there was kind of this base right here. Well, it broke out on this, or these 2 days. Obviously, I entered the trade where this green, oops, let me get my pen. All right, I entered where this green triangle is. That's the day I entered. You can see that it's still going down, obviously, but like I said, it's a hedge. I'm anticipating the market pull back eventually and maybe get a small winner out of this, but nonetheless, you gotta always be protected, so always trade hedged. Alright, now on to Friday the 17th. Man, this week was looking like it was going to be a great week. I thought it was going to be up about $2,700 on the week. It was going to be good. That did not happen. One of the trades did not work out, and it ended up being a max loss. But that happens with trading. But I'm also glad it happened because it showed me a lesson in the way I'm in trading. So we'll go ahead and see what that is. All right, NTAP. I entered that trade. Review this real quick. So NTAP gapped down to the 21 EMA and has a squeeze. So it's a squeeze play just like I've played on the other one. So I'm anticipating a breakout to the upside off the squeeze. So I'm buying what is described as the mean right here at the 21 EMA, expecting it to go back up and test that $65 level. And then right here, these dots are they're called the early in indicators. Basically what that means is if you look right here, you see how these are starting to flare out. Basically means the Bollinger Bands are starting to open up some, and then it's anticipating the move is about to happen. Basically saying you better get in now before we move. So got in with that, and like I said, the squeeze is setting up right there. The price is above the 34 EMA. The 8 EMA is above the 34 EMA. It just looks like it's going to continue higher. So what I'm hoping for is just like this. So it goes down, then up. Came down, and then up. And then right here, same spot here, and then to infinity and beyond. And so yeah, I just bought 5 calls for 217. And right here just shows where I entered, just like all the other stuff up ahead. All right, this loser right here for 238 if you count commissions. This was just a hedge that entered a while back. So if you look here, you can see we're in this huge uptrend, right? On this day, I entered in a put butterfly for just in case if we were to dip down. The skew was saying that is potentially going to happen. So basically, I forgot what strikes I had. I did a butterfly so I could take advantage of time as well. So 300, 290, 310. So I did a $10 wide butterfly. So here, here, and here. So I entered the trade on this day for just in case if we were to dip down in the next month or so to this level. So I risked $230 to make $5,000 if it would have came exactly to this area. And that's a good hedge play because you never know. So I was placed a trade, expected to go to 0. And if we do dip down like it could have happened, then it would have been a good little hedge, especially when the Iran stuff kicked off. Could have dipped right down there again, and then I would have just hedged on my long positions. Alright, I'll talk about the big loser here in a minute. In low or lows, and I already talked about this earlier in the video. This is just where I closed half. So I entered at 249 and sold it for 386. And just like I explained earlier. So I entered the trade, like I said earlier, on this day, pulled back, and then the squeeze fired one level up, and there's still room to go. So we'll see what happens. And this is also the same trade that I did in the small account challenge, and if you haven't checked that out, go ahead and click up top right here on the right side of your screen, and then you can see that as well. But I'm still holding half of that position, hoping to hit 125 by the end of the week. Alright, the one that took away all the winners. Alright, you can see right here, Abby, however you wish to say the name of that stock, was a $1,250 loser. Alright, so when I entered, it was green across the board, consolidating, had a squeeze set up, same as usual between the 8 and 34 EMA, price was above the 34, early in indicator, I had my target. But where I went wrong was I did a short-term vertical. So I did a vertical. So basically what that means, I did a debit spread. Come down here. So this right here is the vertical setup. So what I did is I bought the 88 calls for 160 and I sold the 91s against it for 33 cents. And that gives you a cost average of 127. Is that right? Hold on. Simple math apparently is escaping my head. I don't know why, but I feel like I have to do this by calculator. Yeah, okay, I was right. 127, just doesn't seem right. So that equals 127 total. So that's how vertical works. So what happens is, as time goes by, your short option decays in value, so you can get a quicker winner. But something to consider is you also get a quick loser, because when it was right here in this area. Oops, actually, hold on one second. Alright, sorry about that. Alright, so when it was in this area, the stock was looking okay, but with that time decay, all it took was this one little day to make it go to a max loss, and I didn't like that. That really sucked. So I might leave the short-term verticals alone and just do long calls because it gives more time. Now, if you go to this, where is it? Okay, these are calendar channels. Each line is just one ATR per the stock. So if you look, the stock didn't even move. Oh, come on, man. If you look, the stock didn't even move one ATR, and it moved it to a max loss. So I'm going to leave verticals alone for a little bit and just do the long calls, the long put plays, and see how that works out. See if it does a difference in my win to loss ratio. But nonetheless, trade's already over with. Let's wash our hands and repeat. So nonetheless, because the trade still looks great. If earnings wasn't coming up, I would go ahead and enter again. But that was a $12.50 loss. Now this brings us to the trade of the week, and I'm going to go with RH. And this is just a squeeze that played out the way it's expected to. So it did a pullback, got a green buyer arrow, had yellow 10x bars. It was at the 21 EMA. We have green across all level or time frames. This is vertical that I entered. This is a vertical risk graph showing how it works. If you don't know, right here is break even. So basically, I just need a little move before I close that half. The 8 EMA and the 34 EMA is stacked positive. Price is right in the buy zone. This was looking good. So got in. I entered the position for $5.14 and closed the position for $9.63, making it an 87% return on the investment. But when it comes to where your stop loss is and whatnot, it was a 4-to-1 risk-reward trade. I was only risking $200 on the trade and ended up making almost $900 on it. And all this is, as far as going how it worked, it was a pullback, entered, squeeze, and then wait. I've been lying to y'all the whole time. There's no squeeze right here. This was just a pullback to support and then went up. So yeah, forget the squeeze part. There was no squeeze. I've been focusing a lot on squeezes lately, so I guess I just assumed there was a squeeze, but no, there wasn't a squeeze. It was just a pullback to support and bounced off of it. So nonetheless, it worked. And that is it for the rest of the trade of the week. Thank you guys for watching. Don't forget to subscribe, comment, tell me how your trading week's been going. If you have any suggestions on how these videos should go, I'm also open to suggestions. And if you haven't seen, I have a small account challenge right now going on, and go ahead and check out those videos where we are up 6% so far. I know it's not huge, but consistency is key. Realistic consistency is key. Not you're very rarely going to get 300 to 10,000 in a week. I won't say it isn't possible, but that is a very small chance. And the point is to make money, not lose money. Other than that, all right. So y'all guys have a good day.